Hello everyone, welcome to Edukemy's YouTube channel. I am Nanki Baweja, and in today's video I will be discussing the important trends and data that has been provided in the economic survey that has been recently released for the year 2021-2022. If you wish to see more such videos, then please hit the bell icon to remain updated, because Edukemy will be soon coming up with more such video on economic survey and the budget that has been tabled in the Parliament on 1st of February 2022. Now, starting with today's video, the importance of reading the trends and data for the prelims holds very high importance, because the students should understand this fact. In the last 5 years, if you go through the prelims paper, every year at least one question is coming on the trends that is being asked on the various fiscal parameters of the economy. So it becomes very important for all the students appearing for the prelims 2022 in June this year to read the data. That is very important. So before I start the video, one thing that I would like to tell you is that I will be covering only those data and trend that is important from the UPSC perspective or UPSC prelims point of view from the economic survey. So talking about the first trend that you need to know is on the agriculture industry and service sector, which was least hit by the pandemic, whereas the service sector is the one which is worst or had the most severe impact of pandemic in the country, which is much evident because of these facts that is provided. Now look at the data that is for the pre-pandemic level, that is year 2019 and 20. You could see that the service sector was growing at the rate of 7.2%, whereas it slipped to negative 8.4. It slipped to negative 8.4 in the year 2020-21, when the first wave of pandemic or the coronavirus struck the country, and especially those services where which involved more of human contact. Services like tourism, aviation, transportation. All of these services were worst hit by the pandemic because there was low consumption on these services side, whereas when you talk about the agriculture level or the agriculture sector, look at the growth. So this was the growth rate in the pre-pandemic time, which was 4.3%, and if you see in 2021-2022, it has actually managed to be at par or almost cope up to the pre-pandemic level of growth, which is 3.9%. So two things that you need to know is that, or if a question comes in prelims providing you with the statement that all these sectors have performed well during the pandemic or were in the positive side of growth, then your answer should be clear no, that the statement is wrong, because now that you know that service sector is the one which actually fell into the negative side of the graph with the negative growth rate of 8.4, and the reason is the low consumption for the services which have high human contact tendency, example tourism, aviation and transportation. The next trend that you need to know is the demand drivers of real GDP growth rate. First thing that you need to know here is that here when we are talking about the growth rate, we are referring to the real GDP and not the nominal one. What was the reason for growth in the real GDP, or what were the demand drivers? Was the consumption, and most of the consumption that came from was from the government side and not the private consumption. So if we see at the government consumption graph, it was at the rate 7.9 in the pre-pandemic time, then it fell to 2.9, and then it actually managed to cope up well in 2021-2022. So it is in almost tandem with the pre-pandemic level. But when you talk about the private consumption, it again went to the negative side of the graph, and the reason was fall in the consumption of services. Fall in consumption of services, which actually we talked about in the last slide, that there was fall in the consumption of services on the account of human contact, so which actually led to fall in the private consumption. So if a statement comes in UPSC prelims, you know that what has actually surpassed, it is the government consumption which has surpassed the private consumption in last 3 years, and the fall in private consumption is due to not that the people or the citizens were not consuming goods, but it was on the account of fall in consumption of services that it fell. So this is what you need to know over here. Next, moving on to the capital expenditure as the percentage of GDP. So if you look at the graph here, or if you look at the trend here, one thing that you need to know that capital expenditure as a percentage of GDP is increasing. But one thing you need to be very clear of is that it is not constantly increasing. It is certainly increasing, but not constantly increasing. So if a question or a statement comes in prelim that capital expenditure as a percentage of GDP has been constantly increasing in last 10 years, then the statement is wrong, because if you see from 2.7, 2.9, 3.1, 3.3, it again fell here to 3.2, again regained 3.4, again 3.3, 3.8, and now 4.9. So a statement saying that it is constantly increasing is wrong. But if the statement says it is increasing, the statement stands right. So you have to pay the attention on these words like constantly and steadily, with which UPSC often plays in the prelim exam. So when we are clear with this set of data that the capital expenditure as a percentage of GDP has been increasing, you really need to know what is the reason behind increase in the capital expenditure by the government. So the increase in capital expenditure by the government has been supported by the collection of revenue in the form of taxes by the government. So here again, two things that you need to know here is, first, you take any tax, whether it is a direct tax or it is an indirect tax, it has surpassed its collection level from the pre-pandemic times. Now, if you see, the blue line is the pre-pandemic one, the blue one. Here, it is the collection of direct taxes that have been shown, and it is the indirect taxes that have been shown through the graph. So, if you see again, here also there's a growth that can be seen in the collection of corporate taxes from the pre-pandemic times. Taxes on income, again, you can see an increase, whether it is customs actually fell because there was less import and export taking place during the first wave of pandemic in year 2020. So it fell, but it again managed to regain. Talking about the excise duty, it has been increasing, and the gross GST collection to the government. Now, this collection of revenue in the form of taxes actually supported the capital expenditure program, which the government managed well during the pandemic to spur the level of growth in the economy. So, the capital expenditure was supported with the collection of taxes, whether it was direct or indirect. Their collection increased from the pre-pandemic time. Another set of data that you need to know is that indirect taxes collection surpassed the direct tax collection. So if a statement comes in the prelims that the indirect tax collection surpassed the direct tax collection in the last year, that is 2021-22, you know what the answer is, because you have already, or we have already made clear that IDT collection increases the direct, or was surpassed by the direct tax collection. Moving on to the next data, where we talk about the deficit level of the economy. So here we will talk about two types of deficit. The first one being the fiscal deficit and the next one being the primary deficit. Now, before moving on to what the graph shows, you need to be really clear with what fiscal deficit is. So, fiscal deficit is total expenditure minus total revenue, except or excluding the borrowings. This is the definition for fiscal deficit if anyone has the confusion. Next is the primary deficit. Primary deficit is fiscal deficit excluding the interest on the borrowings. So these are here for your clarity or the greater clarity. Now, if we go through what is the level of fiscal deficit, then there's a positive sign to be read here is that the fiscal deficit level and the primary deficit level has actually fallen when we compare it to the pre-pandemic times. In the pre-pandemic times, that is April to November 2019, the fiscal deficit was around 8.1% of the GDP, or sorry, 8.1% of the GDP, which actually fell to 7% of the GDP in year or period from April to November 2021, which shows a positive figure or a positive sign for economy. And again, the reason behind is that the government managed well to collect the taxes during the two waves or the multiple waves of the pandemic. And same goes for the primary deficit. If you see for the pre-pandemic time, which is April to November 2019, the level was 4.7, and the primary deficit has also fallen for the economy around 2.4% of the GDP. So you have to be very clear that, so if the statement comes in prelim mentioning that the level of fiscal deficit has increased in the last 5 years. So you should be very clear, because the students might end up getting confused that the fiscal deficit level would have increased in the last 5 years because of the multiple waves of pandemic, but which is not the case. It has actually fallen from the pre-pandemic times in the case of both fiscal deficit and the primary deficit, owing to the good collection of taxes on account of direct tax as well as the indirect tax, which we have covered over here, which actually led to the fall in the fiscal and the primary deficit. Now, moving on to the other important parameter from the financial side of the economy is the non-performing assets. Everyone is having apprehension, or everyone was apprehensive that the NPAs, that is the non-performing assets of the scheduled commercial bank, would have actually risen during the pandemic. But again, a positive sign and a trend to note that in the last 5 years, the level of gross NPA of the government is falling. Sorry, not for the government, but for the scheduled commercial bank is falling. So there is a trend, a very major trend to note that it is constantly falling. So the gross NPA has actually fallen if we see for the year 2021, from the time when we compare it, when it was the highest in the economy, that was during the period 2016 to 18. This was the level where the gross NPAs of the scheduled commercial bank, and especially for the public sector banks, were skyrocketing. And if we compare now, that gross NPAs have actually fallen even in the times of pandemic. So you can actually say or conclude that the gross NPA of scheduled commercial bank has been constantly falling from the last 5 years. So this is something very important for you to note over here. Next important data is the external sector, which also forms the backbone of the country along with the financial sector. Here, 3 trends or 3 parameters we will study. The first one is the capital account. Next is the current account and the forex reserve. Before I move on explaining these graphs, one very important data that you need to know for the upcoming prelims is that the level of forex reserve have actually skyrocketed or was at its all-time high in the quarter or the quarter 2 of year 21-22, which it actually touched 635 US billion dollars. This is something you really need to know, and a question could be expected in this year prelims because the forex reserve was at its all-time high. Now moving on to the graphs of capital account and current account. If you see at the capital account graph, the capital account was in its surplus throughout the last 3 years. So this is for the capital account. The figure has been given. It was always on the plus side. But another major thing that you need to know is that there were 2 or 3 such instances where the current account also was in the plus side. That is, we noted a surplus on the current account, which is in the first quarter of year 2020-21, when the first wave of pandemic actually struck the country. So you can see here the blue color, the current account is being denoted by the blue color, and you can see that here where the current account was in surplus owing to the low level of imports. Why the current account was in surplus? Because of the low level of imports in the country. We didn't have to clear much of the bills, and hence the current account was in surplus. In fact, during the second lockdown also, you can see, that is the quarter 1 of 2021, you can see a current account surplus over here. And one thing or one dot that I would like to connect you here is that increase in the capital account or on the capital account front led to the increase in the forex reserves for the country, and that is how you have to connect the dots while you are reading the economy or the economic parameters. So increase in the capital account or flow on the capital account led to increase in the forex reserve, which actually led to the all-time forex reserve or all-time high in the figure of the forex reserve that was in the first quarter of the second quarter of 2021-2022. Next important parameter that you need to know is the inflation, which was the talk of the town in the last 2 years. So we need to know, or we need to understand that whether the inflation level actually crossed the tolerance band in the last 2 years, or was it in the range of the tolerance band set by the government. So what the tolerance band is? The tolerance band is being set by the government for the control of inflation, which in the case of India is 2 to 6% range, which is also termed as 4% plus minus 2%, which makes it to the range of 2 to 6% of band. Now this is the range for 2 to 6%. And if you see the graph for CPI, which is the measure of inflation, for our country, you would see that there was situation or the instances where it actually crossed the tolerance band. This was the situation or the instances where our CPI actually crossed the tolerance band, and otherwise if you see, it was in the tolerance band or the limit. Now when we talk about the WPI, the wholesale price index, it actually slipped into the negative territory in the year 2020, or to be precise, in the time April and June 2020, that is the first quarter for year 2020-21, owing to the piling up of inventory in the economy. There was less consumption, there was less imports, so hence piling up of inventory and WPI slipping into the negative territory, and thereafter it actually increased and crossed the double digit, ranging to 13.6 in the year 2021 owing to the foreign or the what we call as imported inflation. Increase in WPI could be actually or increase in the global energy prices. Global energy prices. Also, one another trend that you need to know is there's a lot of divergence between the WPI and the CPI level. The reason for this, you could actually watch another video by Edukemy where Harsh sir has actually or have discussed the reason behind the deviation between the CPI and the WPI level. Now moving on to the last slide for the day, or the last topic for the day, is the BARB strategy. This is a very important term that has been used in the economic survey 2020-21 and has been used in 2021-22. Now what BARB strategy is, if this concept or if this term is asked in a prelims, one thing you should need or one thing you need to know is that it is a framework. It is a framework to deal with uncertain situation, which is actually there in Indian economy if we talk about. So BARB strategy is what? It is a framework for or to deal with uncertain situations. So there are two sides to BARB strategy. One is the agile framework. And the other is the safety net. Now when we talk about the agile framework, so agile framework is a framework where there's planning done for a short-term period, then the impact is studied, and then again the changes is made. It is contrary to the waterfall approach where the planning is done on the or for the long-term basis. So as the word from the agile, you can make that something which is flexible. So it is a framework which is very flexible, which can be changed according to the evolving circumstances. So this is one of the side of the BARB strategy, and the next side is the safety net. Now why the safety net is used? Because in the case of agile framework, the planning is done for the short term period, and you never know, there could be a situation where the planning could go wrong. So in order to save the vulnerable section from getting hampered, safety net is being provided by the Indian government in the form of direct benefit transfer, free food program, and relief measures to the industry, or various relief measures. So three things or three new terms that you need to be acquainted with is, first is the BARB strategy, and the BARB strategy is all about, it is a framework to deal with uncertain situation in the economy. Next is, there are two sides to BARB strategy that is being told in the economic surveys. First is the agile framework, where the planning is done on the short term basis depending on the high frequency or the real time data, and the impact is analyzed and then the changes are made. And in order to protect the vulnerable section from getting hampered due to the agile framework, safety net is provided. The agile framework is altogether different from the waterfall approach of planning, where the plans are made for the long-term basis, depending on the, or it is more about the meticulous planning for the economy. So these are the key terms and concepts that you need to know from the economic survey, which are very important from the UPSC point of view. So before I wrap up the video for the day, all I would say is that please make note of the data that we have discussed today in this video, because this holds high importance when we talk about the prelims 2022. And please hit the bell icon, because Edukemy, as I told, will be coming up with more such videos where we will be discussing the important themes from economic survey and the budget being laid on the parliament or laid in the parliament on 1st of February 2022. Till that time, all the best and have a good day.